Good morning, guys. This is Kenzo Xtrahot Forex. So today actually is Thursday, and yesterday, yes, it was Wednesday, and there was also core CPI or CPI. So I was unable actually to trade that because we had like serious power outage. So, but I just want to explain actually CPI or consumer price index. Actually, this is fundamental event or economic event that is very way too important, especially around this time when the economies are like seriously struggling because of inflation. But the thing is, sometimes we just say let's trade CPI, but you don't actually understand what is CPI? How does it affect the market? So this video actually it's all about that. So I'll just make sure that I go straight to that, not wasting any time. So don't forget to smash the subscribe button, like, share with your friends. So what's really happening actually? What is CPI? So what exactly is the core price index or consumer price index? It is a measure of the average change in prices of goods and services over time. It is a crucial indicator of inflation and can have a significant impact on the forex market. So this is very important. It actually is the measure of inflation. Is the measure of inflation. When they say inflation is going up and down, actually they're trying to say CPI, the prices are going up or down. A sudden increase or decrease in CPI can cause a ripple effect in the market and cause currency prices to fluctuate rapidly. Traders who are aware of these changes and know how to interpret them can use this information to make profitable trades. So for example, let's say the CPI for a particular country rises unexpectedly. This could lead to an increase in interest rates by the central bank, FOMC, as we always talk about, or interest rates, as we always mention, which would actually in turn make the currency more attractive to investors, causing its value to go up. Do you understand that? So when the prices are going up, right? Interest rate, that they don't actually have any choice. Like now in the US, they have to increase their interest rates so that they can balance, because things are going up. It means things are not actually looking good. But when we trade, if they increase the interest rates, obviously that is good for investors because they get enough or greater interest rates. I hope you understand that. But it's not actually like good, because if you take a loan, that means the interest rate is a bit higher. I hope you understand that. So, on the other hand, if the CPI falls, if the CPI goes down, it could indicate a decrease in demand in demand for for goods and services, leading to a decrease in the value of currency. So if, let's say, if the CPI is going down, that means things are getting cheaper. Actually, when we say goods, we're talking about the like bread, milk, fish oil, or cooking oil, stuff like that. Actually, we're talking about that. If prices are going up, that is not actually good for the consumers. Us, it's not really good for us. So that is something which actually, that's why we actually want CPI to go down, so that we know that they're not going to increase the rates. So if they don't increase the rates, we know very well that we will be buying the NASDAQ US 30s, you see. So I hope maybe you understand that. On the other hand, let me just finish this statement. On the other hand, if the CPI falls, it could indicate a decrease in demand for goods and services, leading to a decrease in the value of the currency. If it pushes lower, if maybe yesterday everything was negative, USD was going to sell actually, so, or weaken. So if it weakens, obviously it means other pairs are going to get stronger. As you can see, understanding the core price index is critical for any trader who wants to succeed in the forex market. By keeping a close eye on CPI changes, you can make informed decisions and maximize your profits. Let's see, what time is it? It's only 5 minutes. I think we did not actually take enough time. So let me just summarize that actually. So CPI, or core price in consumer price index, actually it's just that it's the term actually for investors, but actually we're just talking about normal prices for bread, normal prices for milk, whatever that we buy actually at the retail stores. You see, those prices, we're talking about them. It's called a CPI. And this CPI, actually, if the price is going up or down, that means it gauges actually the inflation, something that is called inflation. It's the term for prices. If inflation is going up, it means that the prices are getting expensive. You know that last year, fish oil or cooking oil, it was like, let's say maybe it was 60 rand, not 60 rand, let's say 2 liter cooking oil, it was maybe 40 rands. This time now it's like around 80 rands or 70 something rands. You can see the price like almost doubled actually. So it means things are getting expensive, which at the same time it means inflation is going up. If things are getting back to normal, things are getting like cheaper and cheaper, it means inflation is going down. So at the same time, we know that if inflation is going down, it means interest rates, they might cut interest rates or not increase the interest rates. So that's why when there is FOMC, sometimes it's like we know what they will do looking at previous information. Sometimes it's not actually easy to detect that, but if things are clear, like now, inflation on the US side is getting there, actually it's going down a little bit slower. At the same time, it means there is a chance that they might not increase the rates on the coming rates increase, or I mean on the coming FOMC meetings. You see, so now once you understand that, it means now automatically you will also understand interest rates. If the prices are going up, obviously interest rates have to go up. I hope you understand that. If you don't understand, you will tell me. And thanks to, I think someone actually sent this topic, said Kenzo, try to cover that. If you have any other maybe topic, let me know. I will also cover that for you. Yeah, I will see you on the next one. Thank you very much. This is Kenzo Xtrahot Forex. Bye.